Welcome back to the Build Wealth, Retire Rich series. If you have been following along, we have already covered stocks, bonds, and mutual funds. Today, we are diving into another popular investment tool that's often compared to mutual funds but comes with its own sets of advantages: ETFs, or exchange traded funds. By the end of this video, you will know what ETFs are, how they work, and why they are an essential tool for investors. Let's get started. So what exactly is an ETF? An ETF, or exchange traded fund, is a type of investment fund that holds a collection of assets like stocks, bonds, or commodities similar to a mutual fund. However, unlike mutual funds, ETFs are traded on stock exchanges just like individual stocks. This means you can buy or sell shares of an ETF throughout the trading day with prices that fluctuates based on supply and demand. Think of an ETF as a basket of investments. When you buy a share of an ETF, you are essentially buying a small piece of everything inside that basket. For example, an ETF might track the S&P 500, meaning it holds shares of the 500 largest companies in the US, or it could focus on specific sectors like technology or healthcare. ETFs have several unique features that make them attractive to investors. First, diversification. Like mutual funds, ETF allows you to invest in a wide range of assets with a single purchase. Trading flexibility. Unlike mutual funds, which are priced only once a day, ETFs can be bought or sold at any time during market hours, just like a stock. Lower cost. Most ETFs have lower expense ratios compared to mutual funds, especially index ETFs that track a market benchmark. Transparency. ETFs typically disclose their holdings daily, so you always know what's inside. Let's look at an example here. So let's break it down with an example. Imagine you want to invest in a tech sector, but instead of picking individual stocks, you buy a share of technology ETF, like one that tracks the Nasdaq 100. With this one investment, you gain exposure to companies like Apple, Amazon, and Google, saving you the hassle of buying the stock individually. Why are ETFs so popular? Here are some key advantages. Cost effectiveness. Many ETFs have lower fees compared to mutual funds because they often track an index rather than being actively managed. Liquidity. Since ETFs trade like stocks, you can buy or sell them anytime the market is open, giving you more control over your investments. And then tax efficiency. ETFs are often more tax efficient than mutual funds because they typically avoid triggering capital gains taxes when assets are bought or sold within the fund. But like any investment, ETFs come with risk. Here are a few to keep in mind. Market risk. If the assets in the ETF lose value, your investments will too. Tracking error. Some ETF might not perfectly match the performance of the index or sector they aim to track. And trading cost. While ETFs have low expense ratio, frequent buying and selling can add up in transaction fees. Some types of ETF. ETFs come in many flavors to suit different investment goals. For example, equity ETFs focus on stocks like the S&P 500 or emerging markets. Bond ETFs invest in government or corporate bonds for steady income. Sector ETFs target specific industries like technology or healthcare. And then we have got commodity ETFs. Invest in raw material like gold, oil, or natural gas. So quick tips for choosing an ETF. So if you're considering ETFs, here are some quick tips. Check the expense ratio. Lower fees means more of your money stays invested. Understand the fund's objective. Is it tracking an index or targeting a specific sector? Make sure it aligns with your goals. Consider liquidity. Look at the ETF with highest trading volumes to ensure you can buy or sell easily. And there you have it, the basics of ETFs. They are a fantastic option for investors looking for diversification, flexibility, and lower cost. In the next video, we'll explore another powerful concept, compound interest, and how it accelerates your path to wealth. If you're finding the series valuable, don't forget to like, subscribe, and hit the notification bell. Thanks for watching, and I'll see you in the next video. Thank you.